money. Money, money, money. Crazy about my
Bull
money.
is within the Carbon team.
And one of the 4 people that are on the carbon scenarios. I think that's one of our best features of the group.
Hey guys, Nicole.perrone here, $1 billion banker. Thanks for joining. Hey, did you know that last year...
To our origination staff, to our new originators that join us.
Okay, I'm excited to have Barry Koven, Originating Branch Manager and Renovation Loan Specialist with us today. Welcome to the show, Barry.
Hi, how are you? So
Good.
Thank you so much for having me. Great to be here. Such an awesome day in the mortgage industry.
That's it. Things are picking up. We were just talking about the sun is shining, and you are just rocking and rolling. You've been busy.
Yeah, I've been busy like the whole time, because there's always opportunity and you just have to go out and you got to find it and you got to reinvent yourself. And, I've been doing that my whole life. So, just because, rates are up, business is down, I don't even buy into that. I don't even listen to that. It's all positive with me, and I'm moving forward and making things happen.
I love that. Yeah, you gotta quiet the noise out. I just I posted the other day, like, divorce your story and marry the truth, right? And I think a lot of times we tell ourselves these stories like it's slow and the market's slow and inventory and but the reality is we see so many people doing so many great things still in this market. So I'd rather marry that truth than buy the story about things are slow, right?
Yeah, and they're not slow in my world, right? Like, I heard there's a high inflation and I choose not to participate.
Yeah, exactly. I'm with you
That's my
there.
motto.
I love that.
And also, being where we are, like being in the, I've worked at a big box bank for a dozen or more years. So being here on the correspondent side, we have so many solutions for today's environment, whether it's a debt service loan for an investor or self-employed. A lot of people aren't qualifying for traditional mortgages, and we can handle all that. And of course, as I'm sure we're going to get into, my favorite, renovation and construction loans.
Yes. And you have been since our time here, the team that came over with me, you've just been extremely helpful. And it's great to have a specialist, because these types of loans, for those that are listening, realtors, consumers, it's so incredibly important that you have someone that specializes in this particular type of business to make sure that it goes as smooth as possible. So Barry, with that said, can you tell us a little bit about yourself, your experience in the industry, and how you got here to cross country?
Well, I have been in the mortgage industry. It's hard to believe, but it's actually 18 years now. And before that, that's a whole other interview for another day. I was, this was a career change. So I'm a little older than I look, and I was in a completely different industry for 20 years before that. But anyway, I'm in the mortgage industry, 18 years now. The first 12 were at a big box bank. And then I came over to the correspondent side, right? The way cross country does it. And it's just so much of a better model, especially in today's world. All the different investors, different products, different programs. Right. Yet they're underwritten in-house, right? And so, a lot of people don't get that. It's not like we're mortgage brokers. We close fund service loans in our own name, but then we could also place them with an investor or broker them out as well, right?
Right. 18 years in the business. And I do think that's really actually an important point, because even people that have been in the mortgage industry for a long time don't necessarily understand the difference between what is correspondent, what is broker, and bank may be pretty self-explanatory, I think. But
right.
at the end of the day, this is a great place to be, to have a wide variety of product options for clients and to be able to get things done really efficiently in-house. So 18 years in the business. How did you land on specializing in renovation?
That's a great question, and that's a perfect segue from what I just said, that this was a career change for me. So I come into the business, right? I know nothing. I don't even know what LTV or DTI or any of these mortgage acronyms are. I'm new in the business, but I'm a hardworking sales guy. I do, this is what I wanted to do. I wanted to have be in a commission-based world. And so I get in the business, and I'm in the New York market. Of course, I do loans all over the whole country, but I'm physically here in New York City, and I realized there's 10,000 mortgage loan originators running around New York, all fighting for the same business. So I quickly realized, to be successful in any sales job, what's a great way to do that, to differentiate yourself from the competition, right? So I found these renovation construction loans. I fell in love with them. It also changed how I communicate with my borrowers. I got to watch people build their dream homes, and it just made my job a little more exciting. It wasn't just all about the numbers or, hey, what's your mortgage rate? I got to work with contractors and architects and watch people build these dream homes and finance them and be a part of that. So it was really exciting for me, and I really gravitated to that and focused in on that being my niche for my whole career, even though obviously I do originate all mortgages. Yeah.
Right. Well, I love that. I love that you've taken that on, and I think it's really smart. We have to all be assessing the market consistently, and as we see things shift, shifting our practice and our specialty as a result. So when you think about the consumer out there, or the real estate agent that doesn't really know much about renovation specialty or the renovation loan product, how would you break it down and explain it to the average person in today's market?
So, great question. And I call renovation loans the best kept secret in the real estate mortgage industry. I mean, people just don't know about them. I actually meet realtors, like people, and real estate attorneys. Like, I meet people, Nicole, in the business 20 years, and they don't know what a renovation loan is. I meet realtors, they're selling the house for cash only or investors only. They don't know that you could include the money to fix up the home in the mortgage, and it's based on what the house is going to be, right? So we get the contractor's bid, and the work write-up report, and we have a specially trained appraiser who goes to the home and views it as what it's going to be. So that means it doesn't matter what it is now. I can literally close on any house in any condition. The house could be falling down. Now, think about that statement. Close on any house in any condition, the house could be falling down. It's really an amazing product. And we're just going to all base it on the end result with the contractor's bid. We know what work is being done, and it's really awesome.
Yeah, and it is, because when you think about the average homeowner, when you're buying a home, you look at the average age of the resale inventory and the amount of work that homeowners end up putting into a property. A lot of times they do one little thing at a time as the years go on, and hopefully 5 years from then they have the home that they actually really wanted. And sometimes as agents out there, you have to kind of help consumers to visualize what a home could be, because you show a home in the perfect neighborhood in a great area, but it doesn't have everything that somebody's looking for. And to help them be able to visualize it and bring in a contractor and talk about the price, and these are ways that we can help realtors to sell more homes with these types of financing options. Help consumers see what the options are. And we just did a great call with a client of mine in regards to it as well. So, just breaking it down and explaining the details. It's hard to find properties. Inventory is low. And when you do find something that might be able to work, this is a great tool to keep in your toolbox as an agent or as a consumer. So, if you were to break it down, right? If I'm buying a home, maybe this is my first home, or maybe I'm just one of those people that don't know anything about renovation financing.
Right.
If I was looking at let's say a $500,000 property, and I had a contractor come in and we need to do about $100,000 worth of work to get this home to where we need it to be. Can you break down for me how the process would work? I know you mentioned the contractor's bid. But just if we were to think about this progressively for a consumer, can you tell us a little bit more about how the stages of the process work?
Yeah, of course. And also, just to touch on what you just said, well, first of all, if it's a 500 purchase and let's say 100,000 in renovation, there's no minimum or maximum on the renovation. So some people use this loan just to put in appliances, and some people tear down and build a whole new house. It could be 5,000 or $1 million in renovation. So in your scenario, though, if you use 500 purchase and 100,000 for renovation, now we have 600 total. So 600 total, and we have low down payment programs. So you could do as little as 3.5% down. 600,000 times 3.5% is like $22,000. You could put $22,000 down, and we're going to give you, it's one mortgage for both the purchase and the renovation. So 600 combined of the 500 purchase and 100 for reno, 22,000 down, and we're going to give you one mortgage for $578,000. Now, at the closing table, the seller will get their 500.
Right.
They go away. You own the home, and now you have 100,000. You only put 22,000 down, and you now have $100,000 to fix up your home. Now, also, let's touch on what you spoke about doing it over time.
Right.
What people don't realize, you could do it over time. You could put in a new kitchen now on the Home Depot credit card at 27%. That'll cost you $1,500
I was just thinking that as you were saying.
It's so cost effective.
Right.
Besides the fact that you now get to put in new kitchen, bathroom, floors, walls, new roof right at the beginning and have your dream home. Besides that, let's think about how cost effective this is. $100,000 in a 30-year fixed rate loan is maybe $600 or $700 a month. Try and get $100,000 as a personal loan or on some credit card. It would cost you thousands of dollars a month, not $600 or $700. So really cost effective as well. And it's just awesome. And then to segue from that, we also have construction loans. So all this is awesome for today's environment, right? With inventory issues, go look at the fixer-uppers. With everybody watching HGTV now, did you ever hear them talk about on HGTV? How are you going to pay for this? Never. You're going to call Barry Koven. That's how you're going to pay for it. Right?
Yeah. No, and I was thinking and I know you were going to go into the construction product too, because there is in addition to that, but a couple great points that you made. There's no minimum or maximum. You can do something just from an appliance to all the way up to maybe you're putting an addition on or something like that, right?
Right.
It's one loan, right? So you get to the closing table, so we're buying that $500,000 property. We're getting that $100,000 loan, which by the way, I like how you use that, somewhere between $600 and $700 a month that $100,000 would cost you. But you get to the closing table now and you're ready to do your renovation. How does the process work from there? I got my contractor. He gave me the bid. I'm going to use him, and I've closed, and I want to get going. What happens next?
Okay, great. So first of all, regarding the contractor, there are a lot of rumors and myths about these loans that people just don't know. And you really want to do this loan with an experienced professional. Me and my whole team, everybody on my team has been doing this for like 20 plus years. And it's not a sales pitch. I've seen these loans go sideways, and then everybody winds up calling me to fix up the mess that the other broker or whomever tried to do and couldn't close the loan. You really have to work with an experienced professional. Now, one of the rumors is, there's some list of approved contractors. Not true. You can use any contractor you want. They have to be licensed and insured. And we do validate that. So you'll introduce us to your contractor, and during the loan process, we'll get their license, insurance, and fill out a couple of forms for us, and we'll vet them. Now, at the closing table, that $100,000 goes into an escrow account, and it's paid to the contractor in draw payments. So it is, and all construction loans work this way. So if the contractor is ever in their life done a construction loan, this won't be news to them and everything will be fine.
Right.
Now, mind you, there might be some contractors who say, I'm sorry, I can't do that. I have to have 50% up front or something like that.
Mm-hmm.
That's not going to happen. It is a work first, pay later program, but everybody's protected because the money is sitting in this escrow account. So on $100,000, as an example, there might be five $20,000 payments. So the contractor does phase one, maybe demolition, and then, we take a peek, the work was done, we overnight the first 20,000. Then they do phase two, maybe floors and walls, we overnight the second 20,000, and so on.
Mm-hmm. Okay, that makes sense. So, from a contractor perspective, what I heard is, they're just gonna validate that they're licensed and insured. We'll vet that for them. So from a consumer perspective, you're kind of protected because you have someone else that's vetting this professional with you. After closing, the money goes into an escrow account, and that escrow account will be given to the consumer, to the homeowner, in drawers as things start to get completed. And usually there's about five, let's say something like 100,000. So the contractor would be paid in 5 installments throughout the process. Is that right?
Yeah, that's correct. I mean, there's some more details. It's actually a two-party check. So the consumer signs and hands it to the contractor. And it's a little different on a construction loan. We give the money directly to the contract. So, some of the details might vary because we have like 12 different renovation loans. So that's another rumor, right? Some people call the renovation loan a 203K loan, right? That is one of many different ones that we have, the FHA 203K loan. And that is a very popular one. So it's kind of like Kleenex is the most popular brand of tissues. So everybody calls tissues, pass me the Kleenex. Yeah. It's the most popular brand. Well, the FHA 203K is a very popular renovation loan brand. So some people just call them that. Oh, they call me, hi, can I have a 203K loan? I'm like, well, you mean a renovation loan, and we might have one of the other options might be better for you. But to my point, you are correct, but some of the nuances could be a little bit different from product to product.
Okay. Well, that's all good information. I'm thinking as you were speaking, is this a loan that investors can also do if you're purchasing an investment property? Because just, we may have some investors listening here. Is that common? Is it unique that we allow investors? Give us some detail on that.
Sure. So what's unique is that we have every different renovation loan program under one roof. Right. So we could even do co-ops for those of you that are in the New York tri-state area or another place where you have co-ops. That is extremely unique, Nicole. The fact that we could do a renovation loan on a co-op, I don't know any other lender that does that. So we can do co-ops, we can do investors, and we have several different programs for investors as well. We could do the one family investor. That would be the conventional, very similar to what I described on that other product. But then we also have for veteran investors who do a lot of homes, we have fix and flip loans. So again, yes, we can do investors, and depending on their level, we have different products and programs.
Okay, great. Is it worth touching base on minimum down payment for investors on a single family?
So right now it's not so much. The program allows as little as 15% down. And it does depend which one. On the fix and flip for the seasoned veteran investors, we can do lower down payments. It could be as little as 10% down. Okay. And that's for both the purchase and the renovation money, if it's a purchase. For an experienced investor, you're probably going to need to go to like 30% down. But as a primary residence, we have all those low down payment options. And it's just, it just really depends on the program. Yeah.
Okay. No, that's really good information. So, to know that this loan is not only for people purchasing their first home possibly or their next property, but also for investors as well is important for realtors and also for consumers to understand. So if you're in the market to purchase, this is really a great option to think about. And when you get pre-approved, we can kind of go through a little bit of what we talked about today. We would go through these details with you. So anything else to mention on the renovation loans before we move on to the construction side of it?
Yeah, a couple of quick things. Well, we could also do second home, vacation homes, a lot of that going on. If you go a little bit, outside of the city, we can do vacation homes. And also, Nicole, this is another really great factor. Besides being able to close on any house in any condition, you can also change the certificate of occupancy. So you can use a renovation loan to save deals, right? Sometimes the consumer has money to fix up the home themselves. But remember, when you're getting a mortgage on a house, co-op or condo, the property has to pass an appraisal, right? We all know that. It has to be livable. So many times people come to me, it's not because they really financially need to borrow the money for the renovation loan. It's because they cannot, because the home is not mortgageable. Maybe it has no utilities on. Maybe there's mold in the basement. Maybe there's no appliances. All of these things you can't get a mortgage on. So again, I can close on any property. So we could save deals with this. That's another thing that comes to mind.
That's a good one. Yeah. For agents that run into some issues where, there are a lot of lenders that don't offer renovation financing. So your customer could be looking to purchase a home and, be with a lender that says, hey, I can't do this. And maybe they don't even know that this is something that's out there and available. So important that as an agent, where to direct them. I think also probably important to clarify, is this just for purchase loans, or can you do this on refinances as well?
I feel like you're reading my mind, because that was the other thing I was just about to
There we go. We're on the same page.
Yeah, totally. That is so funny. So we've been talking about purchase almost this entire time. Absolutely. You can use this to fix up a home you already own. So you could be, and again, no minimum or maximum. So you could be you could be tearing down the house and building a new one, or just redoing your kitchen. But yes, you can use this. You could be building a dormer. So with these, I'm seeing a lot of that. With the inventory issues, people are like, okay, I'll stay where I am, but I need a bigger place. Or people now, they're working from home. They need the office. They need more space. So you absolutely can use a renovation loan to fix up a home you already own or a purchase. And another thing, Nicole, you probably were just about to ask me this too. Can we change the certificate of occupancy? You can. And another amazing feature, right? So right now, you're looking at a home, you want to buy a 2-family home, right? But you can't find one. You find a 1-family home, and you're getting it for a lower price, but we could include in the loan the money to make it a 2-family, and so you could change certificate of occupancies with a renovation loan from a 1 to a 2, a 1 to a 4, a 4 to a 1. It doesn't matter what it is now. We're going to base it on what it's going to be. So you can add square footage, add floors, and have a multifamily home and bring in some rental income.
And that works.
That's a really great thing to know also.
That's a really good point of clarification too, because again, this kind of goes back to, what's available, what's on the market, and kind of creating what it is that you're looking for. And obviously there's zoning and permits and things that the contractor handles for you, but really important stuff. So if anyone has questions about renovation financing, you can reach out to us directly, and we're happy to talk more to you individually about it. How about construction financing, often referred to as, I guess, C2P? Can you tell us a little bit about how that process works and what the differences are between renovation and construction?
Sure. So I think the simplest differentiator, or the simplest definition of, why would I call this a renovation loan and this a construction loan, is think of a renovation loan as there's already a property there, right? We're fixing up a home, whether it's a purchase or a refi. We're fixing up a home. Even though you could tear down and build a new one, there's already a house there. A construction loan, brand new house from dirt, right? From land. That's the difference. Now, what differentiates us on the construction platform from other lenders that I've seen is that we have the low down payment option. So you can put, again, just like the renovation loan, you can put as little as 3.5% down, Nicole. I don't know any other lender that offers this. It's really amazing. So let's say you find some land for $150,000 and you want to build an $850,000 house, or big, beautiful $850,000 brand new house. So 150 land, 850 build, we're at $1 million all in, right? You can literally put $35,000 down, 3.5% down, and we're gonna give you the money for the land and to build a brand new house. Now, of course, these are full doc loans. You have to qualify, for $1 million loan. You have to have income of over $200,000 a year. But regarding the down payment, a lot of people have great incomes, but they haven't been able to save up to 20%. So between the low inventory and maybe you haven't saved enough, there's no inventory problem when you're building a new house. Because you're making your home. So we can do that, and our construction loan platform is very powerful in that regard.
I'm sorry, 3.5% down to purchase not only just the property, but that includes the land as well, is what you said, right?
Yep, it can be one loan. So we could some people opt to buy the land for cash, or already have a separate land loan, so we can just do the money to build. Okay. But if you're doing both, we can provide financing for both. Yeah. Okay.
And how long do you how long do you have to get the property up and constructed?
Great question. I love your question. These are awesome questions. So our program, we need the house built in 12 months.
Okay.
So that could come when we talk about doing the land and the build together. We need the land. We can't close on the land if the permits are going to take 9 months to get approved, because then you only have 3 months to build. That's not going to work. So we have to work together. In that case, we might have to do a separate land loan, because it depends on where the property is. Some jurisdictions take a long time to get everything approved. Some places, the architect or the builder has a relationship with the town and they're getting things approved in a couple of weeks. It just depends on the jurisdiction, and that could vary from town to town and county to county and state to state. So but anyway, we want the build. It's a 12-month loan. Okay,
gotcha. Well, that's great. And I would presume that financing terms, is there anything to cover in that space with, as a consumer, you're thinking, well, I have to be living somewhere while I'm building something else. How are the financing terms traditionally structured so customers can afford to do this and stay in the home that they live in today?
Okay, so on a renovation loan, you can finance up to 6 months of payments, and literally have no mortgage payment for the first 6 months. And because mortgages are paid in arrears, and when you close on a mortgage, your first loan isn't due to the following month, you actually would have 7 months, right? Okay, that's on a renovation loan. On a construction loan, it's a little bit different. It's interest only payment, so it's a lower monthly payment during the construction, and only on what's drawn. So remember, we're paying the builder, we're only taking a little money at a time out of the escrow account, you only pay interest only on the amount drawn. Now, we have another unique feature. If the equity is there, so in other words, if your after repaired value is going to be much higher than you're paying for the build, so that you have built-in equity, then we can increase the loan amount. This is on a construction loan when you're building a brand new house. We could increase the loan amount to include the 12 months of payments, and you could potentially have no payments during the build. Wow. We can only do that if the after repaired value warrants it. If you have
you have to have the
equity.
Right, you have to have the excess money to be able to do that. But that's big. So to think about
massive,
because I'm sure people are thinking about this. Okay, well, I can't live in the house while I'm renovating it. It's just too much to live through that all. Or how am I going to afford to go out and build something when I have a mortgage on my existing property? So, these are for consumers. This is really good to know that, during that period of time, there are ways, if you're eligible or if the potential exists to do that and to help offset that expense. So that's really great. What are some other questions you get often from consumers as you're talking to them about these options as they're looking for land or as they're looking to build? Anything that comes to mind that you hear often?
Well, I think we've really covered it, Nicole. Most, all the points. We got the contractor, the down payment. It's cost effective. We could change C of O. We could build and overcome all today's issues. It's such a great product and program for today's environment. Well, one thing comes to mind that you didn't ask. How are the rates, right? People ask me that, of course, all the time. That's a top of mind, right? Now, so with renovation and construction loans, rates are based on risk, right? So obviously the investor, the bank, we're lending to a home that's not even there or in the middle of being, under construction. So that's considered risky.
Okay. Yeah. That makes sense.
There's so the rate is higher, but it's not crazy. It's usually maybe a point higher, than, and same thing with the closing costs. There's a few more origination fees tied with a renovation construction loan, but it's a little bit higher. It's reasonable. If the prevailing rate is in the mid sixes, maybe we're 1 point higher. It's not 12%, it's a little bit higher. And from my experience, from my 18 years of doing this, people usually use these loans as like a stepping stone. You build your dream home, and then you could come back. There's no prepayment penalties. You can come back and refinance.
That's great.
To a traditional loan, but you don't have to. They're both, whether it's renovation or construction, they are 30-year fixed rate loans. You could keep them forever, but because that slight rate adjuster, a lot of people do wind up refinancing.
They come back, and right now we're in this environment where at least the MBA projects, when you look at their economic forecast, that, sometime in 25, we should be looking at rates that are lower than where they are today, we hope.
Right.
But so if you are in the midst of doing something and you have to take that short-term financing, to do the construction work, and, hopefully sometime in the near future, we're looking at rates that are lower. So, well, this was really, really informative. If anyone has questions about renovation financing, if you'd like us to set up an office presentation, if you're a real estate office or firm, or if you're a consumer, you can certainly reach out to us. Our contact info will be listed here, and we'd love to talk to you. And Barry, thank you so much for not only your support and your help with our customers, but thanks for joining us today and for helping people understand more about this great product that's available.
Thanks for having me, Nicole. It's awesome.
We finally made it happen.
Yeah.